There's an inevitability about Bitcoin's price in dollars or yen or euros or whatever you want to price it in rising as countries devalue their fiat currency. And the more they devalue, the higher the price. It's funny. Most of us talk about Bitcoin in dollars. That's our kind of reference point. But like if you looked at Bitcoin in lira, it's been making all-time highs for years because the lira has literally devalued 99.9%. So there is an argument that says, well, we're not going to have a cycle this time because of all the things you said, all the new institutional demand. But the level of the bear market, I believe, will absolutely be less.
Bitcoin's surge in fiat terms now feels almost inevitable, not as a sign of crypto euphoria, but as a mirror of fiat currency decay. Around the world, governments continue to inflate money supplies to mask debt and stimulate slowing economies, steadily eroding the purchasing power of national currencies. In that context, Bitcoin's rise is less about speculative mania and more about monetary reality, a reflection of what happens when trust in fiat quietly fade. Nowhere is this clearer than in countries suffering from hyperinflation. In Turkey, for instance, Bitcoin has repeatedly hit all-time highs in lira terms, even as the local currency has lost over 99.9% of its value since 2018, a living chart of economic entropy in motion. As of now, Bitcoin trades around $117,590, down roughly 0.7% in the past 24 hours after briefly dipping below $115,000 earlier this month, retracing from an October peak of $126,296. Analysts view this pullback as part of a healthy mid-cycle correction, pointing to tightening liquidity across Asia and renewed U.S.-China trade tensions. Yet beneath the short-term volatility lies remarkable strength. On-chain data shows consistent accumulation by wallets holding between 1 and 1,000 BTC since early October, an undercurrent of conviction that defies surface-level price dips and signals continued long-term confidence in Bitcoin's trajectory. In a recent interview, Mark Yusko, a well-known American investor and crypto strategist, explained this dynamic with clarity. He argued that the influx of institutional capital has smoothed out Bitcoin's once brutal boom and bust cycles, transforming future bear markets into temporary transitions rather than collapses. Yusko described Bitcoin not as a rebellion against fiat, but as a gravitational center for collapsing capital, a monetary vacuum that absorbs global currency debasement and converts it into digital scarcity. In his words, Bitcoin doesn't just rise, it exposes what's falling.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
There's an inevitability about Bitcoin's price in dollars or yen or euros or whatever you want to price it in rising as countries devalue their fiat currency. And the more they devalue, the higher the price. It's funny. Most of us talk about Bitcoin in dollars. That's our kind of reference point. But like if you looked at Bitcoin in lira, it's been making all-time highs for years because the lira has literally devalued 99.9%. Same thing in Venezuela. So there is this, I call it home market myopia, where one, you think all the smart people are in your home market, which is clearly not true. Two, you think you dominate every market. Like, all the stocks are traded in the United States. Well, that's not actually true. I mean, some of our stocks now are crazy valuations, so they dwarf, NVIDIA dwarfs the entire Japanese market in the MSCI World Index. I mean, and Spain and France, and that can definitely happen. But in digital assets, I think it's interesting. You got our president saying, "Oh, we want to be the crypto capital of the world," and then the Bitcoiners are like, "No, we want to be the Bitcoin capital of the world." Okay, fine, but neither one's going to happen, right? We're 20-odd% of global activity. Binance is orders of magnitude bigger than Coinbase. As great as Coinbase is, and as great as Kraken and Gemini and these other exchanges are, Binance runs circles around them on a global basis. So, Tether is this gigantic beast of a company. We're all excited about Circle, right? Circle goes public. Great. Goes up to $40 billion market cap. Fantastic. Excited for Jeremy and the crew. but I heard a stat that Tether makes more every 4 days than Circle will make in a year. So what's that worth? Now they're trying to raise money, I heard,
Yeah.
at a $500 billion valuation, which would make it the second largest bank by market cap in the world behind JP Morgan. Pretty impressive for a company with like 50 employees. So that's a rambling, kind of strange answer to your question about how to feel about the all-time high, but it is a high, right? I mean, 126 yesterday is higher than we've ever been. But when you inflation adjust and you look at it relative to how much devaluation has occurred and how much M2 has been created and actually what gold prices have done, we're actually not at a high. Now, I think we'll get there. If I'm in a free market and I can compete against that person, I'm going to try to win business by maybe underpricing or making something better, both deflationary. Well, if the market's not free, right? If there are barriers or tariffs or restrictions or regulations, then you tend toward inflation. Well, if you manipulate the price of money, meaning in a free market, people would bid openly on the acceptable return that they would take for safety, right? Someone say, well, I need 6%. Someone else say, well, I need 5.5. I need 5. I need 4.5. And there's a natural market clearing price for risk assets. Well, in a world where a bunch of old white guys, I hate to say it, but a bunch of old white guys decide what the interest rate is, that's not a free market. That's market manipulation. And so in that environment, you get a persistent theft, and I use the word intentionally, of real wealth from the masses to the few. So income and wealth ownership, that divide becomes greater and greater and greater. And today it's the highest it's ever been in history. I think it's interesting. Like I understand why the people in the club, right? They say it's a small club and you ain't in it, right? I understand why the people in the club want that. What I don't really understand is why the rest of us don't pick up the pitchforks, literally, at some point and say, no mas. Like, we want open and free markets. We don't want this manipulated market. Inflation, like, who convinced an entire population of people that taking half of my purchasing power every 30 years is a good thing? That makes no sense, right? I mean, I worked hard for that money. If you work and get paid in Bitcoin, you're no longer a slave because your money actually appreciates. Now, here's the thing. Bitcoin doesn't change. One Bitcoin. The Bitcoin we talked about 7 years ago and the Bitcoin today, it's the same thing. It's one Bitcoin. The amount of dollars you need from 16,000 to 126,000, that's different, but it's still the same Bitcoin. So what changed was the money got worse, not Bitcoin getting better. Now, Bitcoin did get better. It's got better hash rate. It's got more decentralization. It actually is better. The network is better. And that's why the value of it increases. But at the end of the day, it's the fiat that went down in value. And what's interesting about saving in Bitcoin versus saving in fiat, if you save in Bitcoin, and again, I'll give Jimmy full credit for this, he says you actually unleash the most powerful force in all of human history, which is human creativity. Because if you don't have to constantly be working and striving to preserve the purchasing power of your money, and your money actually grows, you have some time to think, to create, to maybe start a new business, right? Maybe build a new product. You don't have to just do this slave labor and get paid in this depreciating asset. So again, long answer to an interesting question, but it to me, it all kind of weaves together in that why Bitcoin is such an important innovation, why the construct of money is changing, In it, look, money is a very unique thing. It's an asset that exists in the absence of a liability, right? That's what money is. And that basically the only thing that meets that criteria that is used is gold. Silver meets that criteria, copper, puka shells. There are a lot of things that would meet that. But the only one that's been used for 5,000 years, roughly, because of belief and custom, is gold. But gold, we've talked about this before. Gold suffers from two problems. It's not very portable, meaning it's really heavy and you can't stuff it in your pocket, a gold bar, and walk.
Right.
Actually, you can walk through the the metal detector because it's inert. But anyway, so gold isn't very portable and it's not very divisible. Like if I had a bar and I wanted to break it in half, I'm not strong enough. And even if I could break it in half, I couldn't stuff it in the computer and send it to you. All the Bitcoin in the world fits right here. Now, I don't have any on my phone. Don't SIM swap me. It's not worth it. I keep mine in cold storage. In fact, I'm wearing my Chili Willy socks today for Bitcoin cold storage. The point is that it's also very divisible. I can send you 1/100 millionth of a Bitcoin, right? That's a one Satoshi. I can send you one Satoshi for free, and that's better than the current system.
People often fall into a trap known as home market myopia, assuming the smartest minds and best opportunities exist only in their own backyard, while overestimating the influence of their local scene. In the world of digital currencies, some talk as if a single nation or platform could dominate everything, focusing solely on Bitcoin or trying to make one country the global crypto hub, but that's an oversimplification. Major players like Binance effortlessly surpass competitors such as Coinbase in reach and scale, regardless of how solid local alternatives may seem. In open markets, competition drives better choices and fairer pricing, preventing power from concentrating at the top. Yet when people are confined to limited financial options, wealth quietly drains upward, widening the gap between the few and the many. It's striking how easily most accept their money losing half its value every few decades, despite years of hard work. Bitcoin changes that equation. Earnings maintain their strength, can grow, and are shielded from the slow erosion of inflation. The coin itself remains fixed, one unit forever, while fiat currencies steadily fade. As adoption accelerates and institutions enter the space, the larger question emerges: is the world ready for a Bitcoin standard? Can this decentralized, immutable form of money truly replace the decades-long reliance on fiat, or will its rise be tempered by existing systems and slow-moving policy shift? The answer may define the future of global finance.
We actually don't have the strategic Bitcoin reserve, which would be awesome if we did. What we have is the stockpile, the digital asset stockpile. Now, why is there a difference? That's the distinction without a difference. Well, it's because Senator Lummis and a couple others were trying to get this strategic Bitcoin reserve to get the government to buy 200,000 Bitcoin every year for the next 5 years. And it makes perfect sense, right? If you are a central bank and you have the money layer, right? The way the money layer works is the central banks own gold. Sometimes they own other stuff, like the Swiss central bank. I shouldn't say this, but isn't a real country. No, I'm just kidding around. I mean, they don't make stuff. I mean, it's just like it's a neutral place where you hide your money in Swiss banks. So that's what it is. But their central bank owns stocks and stuff because it's not a real central bank. It's like a private company that wants to make money. So they buy stocks. But real central banks, like, the Central Bank of the US or the Central Bank of China or the Central Bank of Europe, although that one's less real, they buy gold. And sometimes they buy euros or yen or dollars or whatever, but mostly they buy gold. Well, that's the base layer of money. Then they issue debt to create, their paper currency out of thin air. That's called fiat. So in that environment, we should think about replacing gold with Bitcoin.
Completely
Makes perfect sense.
or partially?
I mean, I could go all the way. I mean, I don't need to go all the way. I mean, they can coexist, but if for me, I'd transition. I mean, again, I have nothing against gold. It just isn't as good as Bitcoin. Some people are having less kids and they're not buying the houses. And so they're like, well, I found my way out. I can just own Bitcoin. And it's actually not the craziest thing because what Bitcoin does it's like an antimatter machine. It sucks up all of the grift and the graft and corruption, and it energizes it, and it grows. Again, Bitcoin itself doesn't grow, but the number it's there's that great picture. It's a big triangle like this, and it's green. Then there's a little triangle at the bottom, which is Bitcoin. So this is fiat, and it's literally like a funnel. And eventually, all that capital that's been created out of thin air, it just keeps pressing down into Bitcoin, and that Bitcoin triangle is going to keep growing. So you're right. There is this generation gap. I mean, I joke all the time. My youngest granddaughter, is 3. She'll never have one of these, right? She'll never have a leather wallet. She'll never have paper money. She won't even know what paper money is. She'll laugh at the idea. You picked up a dirty thing and you handed it to somebody? No, it's silly. Just tap your wallet. So, but the point there is that the system is set up to, as you absolutely identified, to take advantage of this digital divide, right? Ask anyone over 35, who's your broker? I don't know, Merrill Lynch, UBS, why? How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh, 0. Oh my God, are you kidding me? That's a Ponzi scheme. Haven't you heard that Peter Schiff guy? Ask anyone under 35, who's your broker? What's a broker? I mean, I got a Robinhood account.
Yeah.
All right, how much gold do you have? Oh my God, 0. Boomer rocks? Are you kidding me? Haven't you heard that Peter Schiff guy? How much Bitcoin do you have? Don't want to talk about it. Why not? Because it's a really big piece of my net worth, and I'm kind of embarrassed by it. So, I mean, not embarrassed in a bad way, but I really don't want to tell you. So that digital divide is real. So there is an argument that says, well, we're not going to have a cycle this time because of all the things you said, all the new institutional demand. But the level of the bear market, I believe, will absolutely be less. Because like right now, if 125 yesterday was 126 was the peak, the bear market is going to be like 15 or 20%. I mean, because we're not that high above fair value.
Sure.
If we got to 175 or 200 and we're 50% above, the bear market might be 55, 60%, but it's probably not going to be 75 or 84% like the first couple. So to me, a correction, again, humans are going to human. We push things up too high, like AI stocks right now, or quantum computing stocks right now, or nuclear stocks. I mean, we pushed them to levels that don't make any sense, and they will correct. Now, some of them, like the quantum stock, they might go down 99%. I mean, I don't know. But if we peak, if yesterday was the peak, we might never go below 100K again, right? Because there's just no downside pressure. We might just kind of fluctuate like this for a while, and then this fair value will keep accreting at 5-6% a year as they devalue currency. And, we just have this nice, steady, boring asset. If we have a blow-off top between now and Thanksgiving, yeah, we'll have a correction. And my guess is the correction is always proportional to how far you are away from fair value.
Sure.
So if you're 50%, if you're 100% above fair value, you got to drop at least 50, but then you normally go another 50 of that 50. So that's another 25. So you get down 75. Now, if you're really super crazy, like, the US stock market in 2000, you go down 84%. Bitcoin in 2017, you go down 84%. Bitcoin in 2021, you go down 74%. So if you get crazy, then your drop is bigger.
Mark Yusko pointed out that the U.S. is missing a strategic Bitcoin reserve, relying instead on a simple digital asset stockpile. He highlighted initiatives like Senator Lummis' proposal for the government to buy 200,000 Bitcoin annually for 5 years, comparing it to central banks holding gold before issuing fiat. Yusko suggested blending or replacing gold with Bitcoin, praising crypto's benefits while recognizing gold's role. He noted a generational shift. Older investors stick with legacy brokers and small gold allocations, avoiding Bitcoin after warnings from skeptics like Peter Schiff, while younger investors use apps like Robinhood, ignore gold, and accumulate significant Bitcoin holdings. He described Bitcoin as a purifier, absorbing fiat's flaws and expanding its share of global capital, even joking that his granddaughter may never use cash or wallet. On volatility, Yusko sees Bitcoin's $126,000 peak as leading to a mild 15–20% correction, unlike past extreme cycles. If the peak holds, prices could linger above $100,000, gaining 5–6% annually from fiat erosion, though short-term retraces are possible. What do you think? If Bitcoin falls below $100,000, will the 50-week moving average near $118,000 hold, or could it drop to $90,000? Share your thoughts below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.